where the index is today. We are just about 25,200 odd, and the index has been sideways and consolidating its levels. Where do you see the index moving from here on, and what are the factors that you're looking at for the index?
First of all, thanks, Sanjeev, for having me here. I think, as you rightly mentioned, the index has been in a consolidation phase, and I think it's a very healthy phase, in my view, because the valuations had really gone to, like one extreme, and exactly 1 year ago from the same venue, I said the same thing, that the valuations are, very elevated, and we have seen some moderation. But I think we still haven't gone down to the level where one can say that, oh, now everything is priced in, and like go out and be like extremely bullish. I don't think we are at that stage just as yet. So the way I look at it is, over the next 12 months or so, we would still be looking at this consolidation phase, extending to some extent. So I'm still looking at a single-digit kind of returns over the next 12 months. We can actually some near-term bounce, because what I'm looking at is the foreign portfolio investor positioning on India is very light. In fact, it is probably at one of the lightest levels that we've seen historically, with nearly 67% of the emerging market funds are underweight on India.
Okay.
And there are a few other things like that. So I think if there were to be some positive trigger, like let's say some kind of a trade deal happens, or some kind of a improvement in the India-US trade relations, that can act as a big trigger. But still on an overall basis with the next 12-month view, difficult to see like a double-digit returns. I would still peg returns to be in high single digits.
What's your Nifty target then for the next 12 months?
For the next 12 months, I would look at, as I mentioned, like 8-9% returns from here on. So maybe somewhere around 27 or a little bit here and there. That kind of a target is what I'll keep in mind.
So you mentioned that the index hasn't moved much. The valuations are still healthy, or I won't say it's overly expensive, but the earnings are the ones which are little softer, and that's keeping the valuation at where it is.
Yeah.
And it's a liquidity which is not allowing the valuation to correct in that sense.
Right.
How do you see liquidity flow in this market? Because foreigners have been net sellers for the last 1 year, if you look at how they've been selling.
Right.
But the domestic liquidity is something which is keeping the market afloat.
Oh, absolutely. So in fact, we have two very strong factors. One is the very strong domestic demand. So if you actually look at, people just focus on only one aspect of domestic demand, which is the domestic mutual funds, which are bringing in, say, about $4 to $5 billion a month into equity markets. But if you actually look at the holistic domestic institutional setup, then there is like pension money, there is this AIFs, and I think if you add everything up, it's coming up to like almost $7 to $8 billion a month.
So net flows.
Net inflows coming into the equity market. So very strong inflows. But at the same time, it's actually getting equally matched by very strong equity supply as well. Right? We are seeing lots of IPOs, lots of follow-on offerings, promoters exiting, private equity selling down their stakes as well. And if you add up all these four aspects, it's also becoming almost that $7 to $10 billion a month. So we have very strong inflows, but equally strong outflows as well by way of corporate issuances.
And none of them is happening in the secondary market. It's happening either at the primary level or...
I'm including secondary market because...
So the block deals, you basically adding block deals as part of the secondary market.
Because,
but I'm talking about secondary trading, actually. There's no trading in such. So the flows which are coming from the foreigners is basically absorbing the new float in that way.
That is true. So we have these two so both these numbers, $7 to $10 billion a month on inflows and on the outflows, both at a very high level. We have not seen these kinds of numbers. Maybe seen these kind of numbers only in the last 12 months. And both these numbers, by the way, are market level sensitive.
Yes.
In the sense that if the markets were to go down, some of these supply will actually go down as well.
But is it such sensitive? It's not that sensitive in that sense, right? The domestic flows are sustaining even if the market is correcting.
True. No, so I'm just saying that, so in fact, I would say the domestic flows are actually supporting
Yes.
the downside.
Yeah.
And we've seen a massive buy on dips mentality.
Right.
So in fact, I would say that if the markets go up too much, then the domestic flows might come down a little bit. In fact, we've seen this massive buy the dips mentality,
Yeah.
which is protecting the downside, which is what we saw in the last 2 months as well. So the domestic flows will protect the downside, but the supply will cap the upside as well. So I think we will be moving in a narrow band, I feel. So, well, there will be a lot of sector-specific ideas, there will be a lot of stock-specific ideas, but the market will probably be moving only in a narrow range in my view.
How do you see the broader markets, the mid cap and the small caps? They've been outperforming